Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, March 24th, and we'll start off with the economic news for today. Start with the weekly jobless claims, still low, 382. So we've had quite a few weeks here that's been below 400,000. So it looks like we're starting to see some improvement with the job market here. Hopefully, we'll see probably next week. I believe we'll start seeing some job numbers. Hopefully, we'll start seeing improvement to where people gaining more jobs. Right now, it's just looking like less people are filing for unemployment, which is obviously a good factor there. Durable goods orders also not so good. They dropped quite a bit, so we're at 9.9%. Now, if you take out excluding the transportation, which offsets creates the volatility, still a negative number, negative 0.6%. Stock market's up anyways right now. It doesn't seem to make sense with some of the news that's out there, durable goods and stuff that's going on around the world that the stock market's going on. So, but anyways, there's going to be a lot more volatility, so I would expect something to happen in that arena at some point. Japan, it looks like some of the radioactivity within the water looks like the levels are kind of dropping off a little bit. So obviously the bottled water is going up quite a bit. The demand for bottled water over there. Hopefully they'll get that straightened out so people can go back to have some normalcy in their lives over there. Mid East, the unrest also right now still creating high oil prices. Right now it's over 106 a barrel, so expect to see some high gas prices. Europe's still facing some debt crisis. Some of this stuff is just kind of prolonged, so it's nothing really new. But just these are still issues out there, but they're just not always hitting the headlines. We still got Portugal is going to be having their austerity measure vote here very shortly, but there's still concerns where Greece had to get a while back, a couple weeks ago, they had to drop 1% off their payment off the debt just so they could kind of keep up with it because they're having a hard time. So even though they had a bailout, doesn't mean it's really necessarily that they're out of the clear. So there's still have some issues over there. So let's take a look here at the bond market. Bond market's taking a little bit of a beating here of these last. It looks like definitely we see a downward trend here for a little bit. If we could stay above the 101.80 mark, I think we'll be okay, and we'll have build up some steam, probably go something maybe in a sideways pattern here until we can beat up some gain some steam and crash forward, go upwards again. But anyways, we're probably slightly worse for mortgage rates than we were yesterday. As we saw, we had this pattern here where we're going up and down, and we had yesterday. So right now we're kind of on the downward side. Hopefully we'll kind of bounce upwards. We'll take a look at it, but this is where we're at today. But mortgage rates are a little bit lower, or a little bit worse than they were yesterday. Sorry about saying lower. I just look at the bond market with lower, but when you see the bond market going down, that means actually the interest rates go up. So red is down, and that means interest rates are going up. When you see green, bonds are going upwards, and then interest rates are going down. So that's kind of how to read this bond market. And that means even with the levels here. So these are trending upwards. So when the bond market is up here, that means they're better priced than, let's say, the green down here, for example. Okay, folks, you guys have a great day, and see you tomorrow.